Welcome back to the Food and Finance Kitchen, where we present jargon-free financial concepts and connect them to preservative-free, delicious recipes. I'm a certified financial planner professional who is passionate about helping people live their best lives. Today we're going to cover some basic investment terms that everyone should know, and we're going to connect them to a dessert classic, the traditional pound cake. Ugh, it's going to be fun. So when it comes to your money, knowledge is power. When you understand the basic investment concepts, you'll be better able to participate with your advisor in the planning process. Today, we're going to focus on terms around the stock market. So in today's volatile markets, you've probably heard the terms bull and bear markets. If you've ever gone to New York City to Wall Street, you've actually seen the iconic statues. A bull market describes a scenario when stock exchanges like the S&P or the Dow are generally gaining value over time. And the bear market is when values drop, usually 20% or more. The United States enjoyed a prolonged bull market from roughly 2009 to 2019, but that was an unusually long run. The average bull market lasts about 991 days or 2.7 years. The average bear market only lasts 289 days. That's like 9 months, less than a year. So where did the names bull and bear come from? The most consistent explanation stems from the movement each of those animals make when they're gathering prey. So a bear is going to extend its claws, probably not manicured, from the top going down, while the bull is going to lower its horns and sweep upward. Now you know. This may sound crazy, but for the longest time, I didn't understand why the cake we're making today was called pound cake. I found the answer in a cookbook published in 1795. The recipe, not shockingly with the name, calls for a pound of sugar, a pound of butter, a pound of flour, and a dozen eggs. Okay, our classic pound cake today is not quite so literal, but it's rich and very decadent. We're also using a bundt pan. The name comes from the German word Buntkuchen, which means a cake for gathering. In 1949, a Minneapolis engineer named David Dyquist created the shape to imitate the European design, and he trademarked it as Bundt, B-U-N-D-T. Now you know. Have you ever heard the phrase buy low and sell high? This seemingly straightforward phrase, attributed to Warren Buffett, reflects one of the most important principles for making money in the stock market and keeping it. Very few individual investors have long-term success investing, and that's because most people will buy and sell according to how the market makes them feel. If the price is dropping, the tendency is to sell before it drops even further. When from a purely money management perspective, lower prices make it a great time to increase your holdings. Fear of loss causes you to act less strategically. The same is true for times when your investments are growing. Then many investors get greedy and believe that the price will just keep growing forever, kind of like Jack and the Beanstalk, rather than taking some profits off the table. We call this having buy and sell discipline. If you have it, you are more likely to profit from your market investments. If not, you're likely going to have more regrets than celebrations. Again, from Warren Buffett, the most important quality for an investor is temperament, not intellect. Let's start making our classic pound cake. So first, we've creamed room temperature butter, 2 cups, and 3 cups of granulated sugar. Now we're going to add our eggs. And we're going to add the eggs one at a time. My recommendation is that you crack each egg individually. What we did first, we creamed our butter and sugar together, and then we added vanilla, 2 teaspoons of really good vanilla. Get the good stuff, don't get the chemical ones. And then we also added a teaspoon of fine sea salt. Don't use table salt. Get the sea salt from the grocery store. It makes a big difference. And then we mix in our flour. That's 3 cups of cake flour. We've mixed it in, and then we added at the very end a 1/4 cup of whipping cream. All right, so we've already preheated our oven to 325, and we're gonna put this in the bundt pan, and we'll see it in about 1 hour and 20 minutes. We're gonna make some fresh whipped cream for the cake, which has now come out of the oven and it's cooling. But first I wanna talk about some types of stock market events that are often misunderstood and misused to make ill-timed investment decisions. I'm referring to pullbacks, corrections, and crashes. When people speak of a market pullback, also known as a dip, They generally mean a decline in market value of 0 to 10%. How bad the situation is will depend on the degree of decline. Next, we have a market correction, which are triggered when we have a market decline of between 10 and 20%. When moderate and timely, corrections can play the role of clearing out overpriced or overhyped equity positions, which in turn creates the opportunity for further growth. Picture street gutters, where leaves and trash block the flow of water and the streets flood. As soon as you clear the blockage, water flows efficiently once again. Okay, before we get to market crashes, let me tell you how I make whipped cream. Literally, whipped cream is very heavy cream, and we're going to use the mixer. I personally add vanilla, and I like adding vanilla to my whipped cream. It makes it a little bit special. Finally, we've talked about corrections and we've talked about dips. Now let's talk about market crashes, which usually reflects a rapid decline of 20% or more. Here's a fun fact. The very first market crash was called tulip mania. It happened because of a bubble in tulip contracts, whatever the heck those are, from 1633 to 37 in the Netherlands. In the past 92 years, the US has experienced 13 overall market crashes, starting with the one that led to the Great Depression, and most recently, the very short-lived one in March of 2020, right after the COVID economic shutdown began. Crashes are disconcerting, but much less frequent than people believe. Okay, our cake has cooled. You could eat it just plain, but I will tell you that it is delicious with a little bit of whipped cream. So one of our clients, Jane, and her wife have been working with us for years. Jane grew up poor and so has a bunch of anxiety around her finances. So often she'll call us just to find out how the market's doing. Not because she's scared, she just wants to know that everything's okay with her portfolios and with her financial plan. And you know what? I think that's the role of a good fiduciary financial advisor, is to bring comfort to our clients and just let them know that they're okay. So you could decorate this cake all kinds of ways. The reason why I'm using whipped cream, and I did not add sugar to, and I usually, because we have 3 cups of sugar in the cake. And so I'm trying to offset some of the sweetness with some whipped cream as a frosting. I'm gonna grab a few blackberries. I like blackberries and strawberries. You can do whatever you want. So these are organic strawberries. They're really, really delicious right now, really sweet. So that's why I'm adding it. We have talked today about financial planning and the stock market, and we've incorporated that with our incredibly traditional and delicious pound cake. We've got the beautiful berries and color, but I'm gonna add some fresh mint. Its color and texture add a lot to the presentation. Look at this. With your help, just made a cake from scratch, a classic pound cake. So what I'm gonna ask you to do is take the recipe, make it your own. Change some stuff around, add some maybe chocolate or something. Let us know how it turns out. And please take the time to subscribe to our YouTube channel, like us on LinkedIn and Facebook, and please reach out to us on our website, foodandfinancewithshelley.com. And I'm just gonna go eat this now. Bye.